Well, the annual rate of inflation in the March quarter has fallen to 3.6%. That's slightly higher than what the market was anticipating. Inflation also accelerated in the first 3 months of this year, jumping from 0.6% in the December quarter up to 1% in the March quarter. Here's the Treasurer, Jim Chalmers, speaking to Kieran Gilbert.
If you think about annual headline inflation, it's actually tracking still a little bit lower than the forecast that we released in the mid-year budget update towards the end of last year. And I think that is important perspective. If you look at those forecasts, they were expecting inflation to be around 3.75% at the end of the June quarter, so next quarter, and already we are at 3.6%, substantially lower than 4.1% the quarter before. So an important bit of perspective.
Well, let's get some analysis now with Ben Picton, Senior Macro Strategist at Rabobank. Ben, thanks for your time. Today's number's a bit higher than expected, so how worried do you think the RBA is going to be with where inflation's now sitting?
Yeah, well, I think today's number was a bit of a shocker, really. So came in at 1% quarter on quarter. The market was expecting 0.8%. And if we look at what that means for the RBA's projections, they're expecting inflation to be 3.3% in June, a little bit different to what the Treasurer was saying. Now, in order for them to get there, that means that the second quarter inflation figure has to be no higher than 0.5%. Half of what it was in Q1, so it's going to be pretty difficult for them to hit that target.
Yeah, you look at the first quarter, inflation up 1% in just 3 months, and it's services inflation. It's the ABS today say it's things like education costs and rents that are still really escalating in price.
Yeah, absolutely. So education costs, they typically do go up in the first quarter of the year, but there's a lot of effects this time around that have maybe pushed education costs a little bit higher. We've seen higher teacher salaries delivered by the New South Wales government, and that maybe forces some of the independent and Catholic sector schools to push their salaries up to compete. And we've also seen some pretty strong price growth in rents, as you say, and that's despite higher Commonwealth rent assistance.
Yeah, I think rents are at their highest level, accelerated their fastest level in 15 years. But from the RBA's point of view, it must be hard. They've lifted rates to 4.35%. Prices for some things are still going up. What more can be done?
Well, they can lift rates further, I guess, is the answer to that. And that's certainly a risk. I mean, the RBA has been reasonably clear, or they've tried to be clear in saying that the risk of a rate rise is equally balanced with the risk of a rate cut. Maybe we're starting to see that now. We're seeing this inflation impetus coming back into the economy. We're seeing strong PMIs just yesterday. We're seeing real wages starting to grow again. We know that tax cuts are on the way. House prices are going up. So maybe there is more to do.
Yeah, I don't know if you've done your modelling yet, but could we see interest rates falling this year? Because a lot of economists were thinking potentially September until today's numbers came out.
Yeah, so we were a little bit more hawkish than most other forecasters. We were expecting a rate cut in November of this year and then just one more rate cut following that early next year. I think after today's inflation numbers are showing that the RBA is at risk of deviating from their forecast path for inflation, we maybe do have to review those numbers and see where we think things are going to land for the cash rate.
What about the overall economy more broadly? How's it tracking ahead of the federal budget in less than 3 weeks' time?
I think it's fair to say that the economy is actually tracking pretty well. We've got fairly low unemployment. The forward indicators are starting to look better. We did see those purchasing managers index numbers yesterday, which look to be improving, especially on the manufacturing side. We've got rising wages. And productivity is picking up as well. In the last 2 quarters of the national accounts, productivity grew. So some encouraging signs. Maybe the economy is actually recovering quicker, and that maybe causes a headache for the RBA.
Yeah, the Treasurer's tried to talk up a bit of doom and gloom around the world this week, particularly saying earlier this week some of our trading partners are having a tough time, Japan, UK and China. Are things overseas really that bad?
Well, I think it's fair to say that the world has sort of been grinding along in low growth mode for a little while. But just last week, we saw China Q1 national accounts that showed that growth was actually substantially higher than expected. So 5.3%, and the market was looking for 4.8%. So that's a big upside beat. If we see that sort of performance continue in China, then there's plenty of demand for Australia's bulk commodities, and that's good news for Australian growth.
Then also there's uncertainty still around the Middle East and Ukraine, Russia. Is that affecting commodity prices as well?
Yeah, it certainly is. So we saw that the energy complex particularly moved around quite a bit over the last 3 weeks as we saw the Israeli strike in Syria and then the Iranian response and then the Israeli response to that. What we've seen in the last few days or so is that energy prices have fallen a bit. They're up a little bit today, but we're back below that critical $90 a barrel level for crude oil. I would expect that it's going to continue to be volatile depending on what happens in the Middle East.
Ben, we've got about 30 seconds, but I know Rabobank, how's agriculture going broadly?
Yeah, ag's actually looking okay. We've seen confidence has picked up a little bit more recently. A lot of it's contingent on weather. It's still looking a bit dry over in Western Australia, but on the East Coast, everything's looking reasonably encouraging.
And the outlook for cattle and sheep?
Yeah, it's starting to look a little bit better. We're seeing prices starting to rise for both of those. A bit further to travel, particularly for sheep meat, but more positive for beef at the moment.
Ben Picton, thanks so much for your time.
Thanks, Ed.